Okay, welcome to today's free market analysis. The time is again 4 p.m. Eastern Daylight Savings Time. This is Kenny, your host. What are we going to look at today? We're going to look at, as usual, the market first. We're looking at here the S&P 500 Cash Index, and having a nice little finish today in the market. We had the big drop on Thursday, as you guys know. Let's just recap a little bit. We had this outside bearish tail reversal right here. That was a pretty good indication, reversing back below this zone right here around 1560 that the market was going to go lower. It did. We got this ET sell signal right here, and that was the our fierce indication, along with the break below our short-term measure of trend following resistance. And that was at the pivotal 1540 mark. Tried to get below it, but the bulls tried to rally, obviously, and as they should have, right there to hold 1540, and just couldn't do it. And once it became clear that it wasn't going to happen on this third day, the market broke, and that was of course Thursday. From a price technical perspective, obviously we were bearish, even back up here. So from a price technical perspective, we were bearish right there. Trend following perspective in the short term, bearish right there. And got a little bit of follow through. Now, from a horizontal price perspective, obviously this little mini horizontal support resistance band right here from 1490 to 1500, the very round 1500, would be expected to hold as a support. We didn't quite make it down here to our LT measure of long-term support trend following resistance, which is still 50% bullish. So what does that say? It says the market's pretty strong. If we go below this level, we're definitely obviously going to test it, and it's going to suggest even further weakness likely going forward. So where are we now? We're still bearish, obviously below 1530, and IT we're still pretty neutral. Moved back to neutral on this break below, wasn't quite enough to move to bearish here, which would have led to a full intents and purposes bearish bias for us, and an official switch to bearish. We're still officially bullish, believe it or not, and from a market timing perspective. But so we've held this little horizontal support resistance band right here. We're back in this little neutral zone, actually. So definitely want to keep things close to your vest, and got a lot of whippy moves that we're seeing in the market. And obviously today we saw that the bull trap open, strong move lower, and followed by a strong finish higher, which is good because we came into the day stacked on the long side, and with many of our systems, so we definitely weren't enjoying that move lower. We'll actually go ahead and I guess look at a few things. From a To go ahead and wrap that up, from a momentum perspective, we're still short-term bearish, although following this negative momentum divergence, we're still bullish in the intermediate term until we get a little bit more weakness here. We'll remain intermediate term bullish. Intermediate term bullish technically here above 1500 to 1520. Short-term bearish from a directional movement perspective, and intermediate term neutral. So not much has changed there. Go ahead and just look at all the markets. The Nasdaq over here is obviously blasting higher, leading the way, just like the old days. Pretty impressive. So on a relative basis, definitely pretty bullish for most intents and purposes on the Nasdaq. So a lot of people are buying up the techs, and got the Russell lagging a little bit stronger than the broader indices, the S&P 500, and the Dow. Whoa, Dow is looking pretty nasty. Has totally actually, although we haven't gotten two consecutive lower closes below our key intermediate term measure of support, trend following support resistance, it's still looking pretty bearish there. So definitely would not be buying the YM contract. Although, having said that, we can go ahead and look at our Day Trader 5.0, our new Day Trader 5.0 system, which happened to buy this morning. And unfortunately, after this string of beautiful winners, bam, 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 got whipped out about 15 points off the low. So we may consider widening that stop a little bit. We might look and see how that looks, widening the stop. So because we definitely don't like getting whipped out. Now, obviously, this is an extreme market, and but we definitely don't like being whipped out and left at the bottom. Nevertheless, although we did absorb this loss and miss out on all this profit, in the grand scheme of things, this is why we always recommend a diversified portfolio of many non-correlated systems. For instance, looking at the grind also got whipped out. Yes, Day Trader 1.0 didn't trade. OEX options. This is that beautiful winner we had on Friday, and Just an amazing winner. Bought it 340, and actually our broker sold it 15. So got some excellent fills at the Thinkorswim, outstanding options broker. But yeah, so what is that for $1,100 on a $350 investment? So some pretty impressive returns on a percentage basis, and actually we hit nothing but winners that whole last week. Yeah, definitely a great portfolio for all you options traders out there wanting to limit your risk. So let's see where we are. Um, Now, of course, you know the battle between the 1.0 and the new 5.0 Dow Day Trader. Well, obviously, the 1.0 continues to just nail it every time by even not showing up today. So yeah, definitely won today by not showing up and thus getting whipped out as our 5.0 did. So that was a this system continues to simply outperform just winner after winner after winner after winner after winner after winner after winner. But but again, obviously, just being part of a well-diversified portfolio. Russell Day Trader 1.0, this is one of our oldest systems, been around for about 5 years, I guess. Caught a beautiful winner. Unfortunately, got stopped out. Again, extreme markets, we should always widen our stops. We don't like to tinker too much, though. Nevertheless, I did miss out on the crux of that move, and probably what would have been the entirety of this move from 805 to 815. So left with a couple losses, unfortunate, but nevertheless part of the game. So I think that's about all we are. The R2K Day Trader 3.0, again catching a nice winner. And of course, this is another example of how 80% of our profits are made on 20% of the trading days. And Friday, um, the 19th, was obviously one of those days. And of course, our black portfolio made over $30,000 that day. Gave up, I think, $1,000 yesterday, so an incredibly nimble portfolio. And actually, as I look now, up $2,575 today. So that's a very nimble portfolio when you can catch the crux of the move lower and then immediately avoid any losses on the snapback. So that, of course, is our black portfolio, $100,000 portfolio, and comprises most of our elite systems. So just want to look over here. Let's go ahead and, sorry for this, pause 1 second. Not sure if that will come up or not. Sorry, let me just pause this 1 second.